Hello everybody, welcome back to Financial Trading Basics Part 29, Value, then Valuation. We've talked about inflation versus dilution. Talk about some economic topics today, switching gears a little bit from my storytelling, just some things that President Joe, Big Joe, had just released an extremely informative speech on inflation, aka dilution. But we're going to attack this question. I'm going to try to just provide more economic insight into exactly why the specific word is dilution and not inflation. So I'm going to do some daily derivation, just listing theorems of economics. But value then valuation, right? Value on the individual level, valuation at the company level. So, but it's the base, valuation. Valuation. 2 syllables to 4 syllables makes sense to me. But guess who's back again. J Pal's back with friends, back with Rex. J Pal just got renominated by President Joe Blow, and so yeah, I don't know. That's just the news. But then we'll talk about my year-to-date return, sold Riot, nibbling on Carnival Cruise. We'll talk about the reopening. We'll talk about electric vehicle valuations. We'll review the Bitcoin thesis and recent price action. Talk about the reopen. I already said that. Another thing I just have written down off the bat that I thought was absolutely fucking hilarious. I saw a chart the other day about racial equity, aka equality, which already is the word equality, but. And there was a chart on CNBC, and it was like the number of African Americans that own stocks. Like, what fucking planet are you people from? You think buying a stock equals appreciating asset? You should ask a lot of the stock traders. You know how much they appreciate their assets by buying the stocks. And so when I see stock ownership as some sort of measure of social equality, it's just like, what the fuck? Stonks do the going down. So if you buy the stonk and it goes the down, it's an appreciating asset. No. So I honestly thought that was richly funny, seeing stock ownership as some sort of measure of racial equality. I thought that was fucking hilarious. And then maybe some sector comparison for the reopening string. But for the daily derivation, literally just value. Here's what I have on my paper. Derive all physics, don't need any notes. Economics, I take some notes. But I literally just have the word value. Why do people buy something? Why do people sell something? How does value, then valuation, consolidate with sentiment? What is reasonable price to earnings? A trade is an exchange. Theorem. These are theorems now. A good value is a good deal. Oh, that's a good deal. That's a good value. To deal is to exchange. Cost is charge. Momentum charges. A charge is a price. An exchange is a transaction. Transactions trade. Trade exchanges value. Bartering trades. Trading is exchanging. Currency exchanges value. And so now let's just start with the empirical problem. Somebody goes to the gas station and that gas costs $3 instead of $2. They call that inflation. The problem is the consumer, the same good costing more money. That is the problem. What are the right words and why? Inflated prices versus diluting purchasing power. And this is just words. I'm trying to give you the why answer for the specific language. Currency represents value, not products. My notepad's going to stay the same. The gas, the petroleum is going to stay the same. Lumber, wood's going to stay the same. Atoms, molecules, they're going to stay the same. As long as they're in a stabilized black body configuration. But why inflation is not the right word. Objects stay the same, demand, supply, and value does not. Right? What somebody will pay for something. Where's the consumer coming from? The consumers can absorb the cost. Mostly that is true, and that will increase with sentiment. Right? 9 to 8% maturity of the species. Inflation increases, dilution decreases. You just said, I totally agree, Brad. When I go to the gas station and it costs more money, it's inflated price. Inflation increases. And my argument is just simply different. It's a result of Right? What motivates someone to buy something is it's a good value on a personal level. And so, from a consumer standpoint, right, the consumer can absorb the cost. To the most case, the education of the personal consumer is going to directly influence their lifetime earnings, hence their purchasing power. And so, the level of inefficiency of every innovation, of supply chains, of personal education, of commuting to work, all of that decreasing increases the economic strength. And so my point to you is I see the empirical problem of increased prices actually not really a result of printing money, decreasing asset expenditures from the Fed, because of the innovation level, because of the inefficiency level. Remember, again, overall, forget economics, overall every physical system is profoundly inefficient. Profit margin comes from being more efficient. That's where all companies come from. But currency is an exchange of value. It represents, right, and the value changes, right? I could auction off a book today, and then it'd be worth $10 and tomorrow it'd be worth $15. The book didn't fucking change, the demand changed. The supply didn't change, the demand changed. Demand is proportional to sentiment, the consumer. And so because of the overall level of inefficiency throughout the fucking market, any restriction to price increases, because right, we all use the same things. Like some person might eat half a pound of fish a week and the other one eats 0.75 pound of fish a week. Nobody's going to eat 7,000 pounds of fish a week. And so the biological consolidation of what people need, which again in an immature investor environment, people spend on what they need for real, but they can't innovate. They can't make more money. They're sitting there with a budget. I'm sitting here with a budget, but I can walk outside and talk to federal agents and talk to species mates. And so it's like, if you can't, the thing that will improve our economy the most, forget all of this, is education. Still the same answer. You have to fucking do it. And so I really see printing of money as irrelevant to the overall increase of consumer price index. I just have here percentage of inflation. Right, they'll say, gas went up 30%, but that's fair. But I just don't like percentage of inflation. Again, we're right back to basis points. So that's a no. Percentage of the basis of the base, but that is really what's going on. The main thing that is driving any sort of price increase, and again, supply chains do matter. Like Joe says they're going to release some oil reserves, so clearly have more supply. But overall, even with, again, the environment's always going to have plenty of resources. We can go fly to this planet, that planet, whatever. But the sentiment of the species and the level of innovation on the individual level. Because again, what do people buy, right? Let's use an example. I just bought my car. Or I fixed the brake on my car. It's winter time coming up, can't be driving around on slippery streets without up-to-date brakes. And so I was sitting here and saying, what is the value of having brakes on my car versus the amount of imaginary dollars in my bank account? Was $1,000 worth it to fix my brakes? Yes. And so from the consumer standpoint, the concept of value on a personal level is much more important than, what big economic driver can we do to lower the price of gas at the pump? Because this is where exchanges come from. This is where trading comes from. It's assessment of value. Demand is proportional to the sentiment, supply is proportional to the environment, but certainly excessive or plentiful. So I really see the general rise of prices, if it concerns people, as a stagnation measure of innovation on the personal level. Make sure I'm still rolling. I wouldn't say obviously, but certainly not a complete fundamental proof. But dilution, it gives more of the correct word than inflation. When you said, Brad, you said the prices go up, that's inflation. Yes, but the currency, the decreased buying power of the currency, because you can print more money. Like literally physical money, put infinity dollars in everyone's bank account. It's really the consolidation of value for an exchange. If I have infinite chickens, if I own a chicken farm and Billy wants a chicken, I don't need the chicken. I can sell it to him for some amount of money. But it's really the exchange of value of what one resource person has versus the other. From a consumer standpoint, what do they need? Then past that, if you want to buy your $20 million home as opposed to a $25 million home, or this or that. Again, all of those numbers just don't matter. But with a 7% maturity of sentiment and most people not big financially where they want, innovation and education is how you fix this concept of whatever this problem is. But now down to trading. Year to date, again, I said I was up 100% right after the first 3 months, down to about up 40% halfway through the year. I went up about probably sitting at plus 90%, started with about, I don't know, $14,000 in my trading account, deposited like $11,000 to get to the 25 for the day trading. Didn't really day trade this year at all, momentum trade, but currently sitting at about plus 12.5 to 13,000 profit, so I'm assuming that's close to 90%. But I sold Riot, like I said in one of the previous episodes. I would sell that on any pop. Again, the price action for even one of the days, again, Riot ended up hitting like $48, $49 recently, and it was on a day that Bitcoin was actually down, so I was just like interested as to why that happens. But I'm still completely risk on for Bitcoin. I'll talk about that. But I sold Riot for another good profit, about $3,000. So I made about $7,000 there. And I forget the other ones. I've documented the trades, but sitting up about $14,000 total for the year, or 13. Again, I still have small open positions. And so what I do with any of these medium companies is I keep some amount of shares, just always, because I don't know what the next GameStop's going to be. With 8% investor maturity, momentum trades are not going away. So it's like, there's no reason to them. The price action increases. People say, look, I could have made that amount of money, and then just start piling in and say, what's the next one? And it's just apes, and that's completely fine. It's completely normal. But for any medium, and I do this with penny stocks as well, but with any medium market thing that's not immediately going out of business, they have revenues, they're popular, there's no real telling of who's going to spike for a genuine momentum, just whatever trade. I nibbled on CCL. I do not think the reopening has happened yet. I think the sentiment indication of when the reopening trade will be matured is when there's no concern for COVID. Just none, zero whatsoever. Everyone's out having a good time, hopefully in the spring, whatever. Maybe be another spike in the winter. Again, for biology, just it is what it is. But I do not think the reopening trade's happened. I do think there will be a reopening trade, at least a certainly momentum spike still. So we've talked about value, now getting to valuation of companies. Again, I think the forward-looking price to earnings will decrease a little bit, but it doesn't matter. And it's not, again, as many variables extended in one way or another is what puts on a trade for me. Where do valuations sit on a given company, on a given sector, on a given industry really means nothing to me. At least nothing interesting to trade, blah, blah, blah. But I've nibbled on CCL again. Like I said, that the profit, the numbers I just gave you, that equates to about $36,000, $37,000 account value. I have about $30,500 in cash, and I just have like $2,000 on CCL, maybe $2,000 on Riot, and a couple of our leftover shares from other companies, other profitable companies. I would short the electric vehicle valuations, because again, talking about momentum, just looking for the most variables in one direction. Tesla at a super high premium for just, again, this concept. Again, electric vehicles will certainly be predominant, or certainly be in the ecosystem. It's still a fucking vehicle. Like, it's not a super big new innovation. A lot of people will get hyped up about or environmental friendly or this or that, and it's just, again, it can go a lot of different ways. So you have the Elon premium, sky high valuations, and again, I have these documented when I said to the initial short, but I think I said around 1120 for Tesla, and then it went up to hit like 1200, 1300. Looked at the charts, I think that will certainly come back down to the 800 range. Could be wrong, and I don't have enough money in my account to short a stock like this. But Tesla, I would certainly short. Rivian, again, the Tesla, Rivian, Lucid, the whole EV space, because it still has to be a profitable company, and I really don't think there's going to be a clear winner between petroleum and electric vehicles. Certainly not like the immediate near term. So I really see Tesla retracing to 800-ish. That would still be a high valuation. Don't have the numbers written down. I saw Rivian kind of coming down today, but I've said short this like, I don't know, 5, 6, 7 days ago. Reviewing the Bitcoin thesis, if momentum spikes decouple from cycle timing, meaning if there's not a big spike, again, there's nothing's changed, I'm full risk on Bitcoin, the just reviewing the price action, right? We went up about 600% from year to date, 2020, and then we came down. The only momentum at all in the Bitcoin trade to me has been from the 65,000 in March to the 28,000 in about 3 days. That's been the only momentum to the downside. So if we get the big spike in, which I fully expect to because of the market capitalization at this point, and because of the problem being solved. I've already talked about that a bunch, but if it does spike, that will give me a very clear sell signal, and then again, the only reason I would be selling is because I have to make a money move in the next 6, 12, 18 fucking months, not because the trade has changed in any way possible. If I was Michael Saylor or whoever else, I would be piling in, buying big. If you're not looking to sell for more than 2, 4, 5, 6, 10 years, I would just be buying the fuck out of this shit right now. For real. Because if there's not a big momentum move, that means it's decoupled from its cycling, and it's a more adopted asset. That's what everyone's kind of like, yeah, we want more stability in Bitcoins. And then we just hit, well, from the March, we came back up, we hit 69,000 just 2-3 weeks ago, and then CNBC, Bitcoin's plunging. Again, I don't let them get sensitive to the words, but it's like we just hit an all-time high, and we retraced 20% after hitting all-time highs. And no conversation about the coupling of the cycling to the adoption level of the market capitalization. None. So that's what I would do there 100%. The only reason I have any real genuine interest is because I can go outside and talk to people. I can't fucking have any way of having stable income. The budget. If I had $5,000 a month, the budget, that's rich to me. I got $1 million in cash, I don't know, it means nothing. Still can't get a mortgage, have to buy a house in cash, have to buy a business in cash. Still between, on a personal level, it feels like $5,000 a coin to, 60,000 a coin. 90 grand to $1 million is not a big difference functionally for me. It just isn't. But that's what I would do there. Again, nothing has changed, literally nothing at all. And if you're not looking to sell the next 2 months because you literally have to, I would just be piling the fuck in. Because there certainly will be a spike at some time. Can't time the market. So any deviation from the timing of the cycling and the peaks is because it is getting more adopted. That is what is occurring. Should we still roll? So just some thoughts. I have transient is brief, right? And I told you guys to say transient, not transitory. Limit the syllables, boys and girls. Transient means brief. Can I say anything useful about dilution and or inflation? It's dilution. Not really. Again, I don't see it as consequential. People do not understand how much money is out there. People do not understand how little it matters. If people are happy, no one gives a fuck that much. It's the innovations, the higher levels of income that make people go, ooh. People just want to be happy. Increase sentiment, increase education. Anything more specific there? Not really. Last kind of thing, sector comparison for reopening strength of trades. And again, I don't have any sectors written down. That's all I have written down on here. But just how about transportation? Like I said, I like cruises. Again, ironically, I've never been on a cruise, but I think they're good value. And so, like I said, I'm nibbling on CCL. I think my price average is literally right at $20, maybe $20.05. Like I said, I only have $2 grand there. If we have another dump throughout the winter, I'd probably add a good amount of load there. But again, I think airports, people drive if they need to drive. People fly if they really need to fly. I think cruises are a much more leisure activity that still is not seeing real expenditure come back. Retail clothes, again, you can buy online, not as convincing. Hospitality, like hotels, I think there'd be good strength there. Those are some ideas for sector comparison. Like I said, I would definitely short the electric vehicle valuations. And I like cruises. I still like cruises for reopening, and I really don't think the reopening trade has come back. I think you have to have completely clear skies for COVID, and then again, just everyone. How about valuations? Like I said, just for trading, I just don't have a good. It doesn't mean anything to me. If it's 19 P to E or 8 P to E. And then you'll see on CBC, it's like, why is this one so undervalued? It's just none of this is indicative of anything to me. But for sector comparison, I really do like cruises because I think it's an extremely leisure thing that people are not doing. I looked at Carnival's balance sheet, again, it doesn't mean anything. Because the shit can just change so fast. So I'll probably add a bigger position to Carnival Cruise Line. I probably won't put risk on, because let me talk you through my Riot trade. Like I had 700, I was going to add to 1,000 shares, hoping it appreciates on a big momentum spike for Bitcoin, maybe add another $50,000 to $150,000 of profit. Well now, you know, I'm up 14,000, so you might say, well, 50,000 to 100, that 50,000 is a lot more, but this is my stock account, like I said, I'm already completely risk on for Bitcoin, and I trade everything else too, so it's like I just want to have the free cash, because I really think there'll be good reopenings, stuff like that. I do think Riot will appreciate, but if you want to trade Riot and Mara, I really think, again, it works so much better with the clear defined cyclings, but anytime there's just, again, a real increase for the momentum of Bitcoin, I'd probably short Riot. Again, I would flip all of these positions once I cashed out the Bitcoin. But even like for a longer time frame, like 18 months, 2 years, if we do get the big spike and the cycling's still clearly on, then I would wait till again it's like dead as fuck. I mean, Riot was like 50 cents a coin or a share, and then Bitcoin goes from the 10,000 to the 60,000 over a couple of months, and Riot goes from 50 cents to $80. So you get a much bigger return from the momentum of the Riot trade. And so, it said it lags a little bit, like just after holding the positions for a while. Again, like I said, I exited Riot very profitably, about $45 to $46 a share on a day Bitcoin was down. So it's more of like the anticipation that you really want to load. And so the next time I would load Riot and or Mara, and again, classic, both Mara and Riot, originally in March, Mara hit like 40, Riot 40 to 50, Riot hit 80, and then when it hit the 69,000, Mara hit the 80, and Riot hit the like 50. So it's just like sick. Nice, awesome, good job, Brad. Whatever Brad picks, fucking nice. But I still made profitability. Like I said, I'm sitting at about plus, I don't know, 85 to 90% for the year. So that is what I have for value, then valuation. Again, I'm sure you heard a lot of insightful things from the president today. And guess who's back again. J-Pal's back with cash, Rex. So, I don't know. Thank you for watching Financial Trading Basics Part 29, Value and Valuation. See you next time.